Insurance. That was probably one of my more exciting words to start this video with. We are going to talk about insurance today, and I promise to do my best to make this really interesting. If you want to learn how insurance works, stay tuned, because that is our topic. Insurance is the annoying necessity that we all pay for to ensure we do not end up in massive amounts of debt if our house burns down, if we crash our car, or if something tragic happens. Insurance helps us maintain peace of mind, knowing that even if something bad does occur, someone else is going to pay for the cost to fix it. To an untrained eye, this can be a little perplexing. For instance, if you pay $200 a month for home insurance and your home burns down after only 6 months, the insurance company will buy you a new house, likely costing hundreds of thousands of dollars. At that point, you would have only given them $1,200. Why would they do that? That is the power of insurance. The basic concept of insurance is that a company, the insurer, offers a guarantee for a certain risk that may or may not occur. Then another party, the insured, pays the insurer in exchange for protection against that risk. When a large group of people does the same thing for the same risk, the insurer receives a lot of income. However, the probability of that risk occurring is spread out among many people and remains relatively stable. Insurance companies make money by calculating how much revenue they need to bring in to turn a profit on a given risk with a given probability. That calculation then influences how much each of the insured pays each month. In general, it is simple math, but in actuality, insurance companies use highly complex models for all of this. Not every insurance company offers the same insurance. Most insurance companies specialize in their own specific type. This is because each company must develop a complex model to ensure they can turn a profit. If you estimated that 1 inch 100 houses burn down each year, but the actual number was 5 inches 100, you would lose money very quickly. If you insured those houses, you would probably charge too little for everyone's insurance and end up responsible for those 4 extra houses. There are many types of insurance companies, ranging from auto and health to life and homeowners insurance. Most people in the world hold these core insurance policies, some of which are legally required, such as auto insurance. You might be wondering why you wouldn't just save your money each month in a bank account instead. If nothing bad ever happens, you would certainly have more money. While that may be true, it leaves you exposed to the risk. If you set aside $200 a month for a year to save on home insurance, you would have an extra $2,400 at the end of the year. However, if your house burns down the following year, you will be responsible for the several $100,000 required to fix it. That is a very bad deal. Is that a risk you are willing to take? Chances are it is not. That is why getting insurance is generally a good thing. It takes all of the risk, anxiety, and financial burden off of you and places it onto a much larger company that can afford it. When you understand insurance as a way of paying a company to assume your risk, you can start to understand that insurance could, in theory, be offered on virtually anything. Are you worried that while you are toasting a cinnamon raisin bagel, your toaster will overheat one of the raisins, causing it to burst into a spontaneous plasma and destroy your entire pantry full of stockpiled bags of cereal and baked beans? That is oddly specific, but someone could probably insure you for that exact scenario. Likewise, if you are very attractive and worried that a fall might damage your face and impact your happiness or social standing, someone could probably insure you against that as well. This is not too far from reality. Celebrities often have specific parts of their bodies insured because their image is a primary source of their income. There are a few more pieces to the puzzle, specifically reinsurance and insurance claims. When an insurance company wants to buy insurance on their own insurance policies, they buy something called reinsurance. This is not a joke. Suppose an insurance company realizes they are overexposed to home fire insurance and a hot summer is approaching. They could take out reinsurance policies to protect themselves from high losses in case many of the houses they insure are destroyed. In this case, the risk is transferred to the reinsurance agency. This is a necessary practice. Imagine if an insurance company insured every car in Florida, but then a hurricane destroyed all of them. That insurance company might owe more in payouts than they have in assets. Once they run out of money, no one would receive the compensation they expected for their destroyed vehicles. Reinsurance is essential to ensure that insurance companies remain profitable and solvent enough to pay the insured when there are claims. Regarding claims, Insurance companies do not just automatically pay out. If you have car insurance and present a crashed vehicle, the company will investigate to ensure you did not intentionally crash the car to receive the payout. If they find that you did, that is called fraud, and you can go to jail. Faking insurance claims does happen quite frequently. People see it as a way to get a big cash windfall during hard times or to get out of a car or house payment they can no longer afford. However, insurance agencies employ top-of-the-line investigators to ensure they do not make faulty payouts. As you can see, insurance is a big business. If you have the right models, assume the right kinds of risk, and have good investigators to prevent fraud, you can make a lot of money. Conversely, if you buy insurance and something bad happens, it can save you a lot of money. In most cases, insurance is a winning formula for all parties involved. It helps consumers worry less about catastrophic events, and it generates significant revenue for companies. That is basically how insurance works. I told you it was going to be interesting. Hopefully it was. Otherwise, I do not know why you are still here. We have more videos available that you might find interesting. Enjoy your day. Thanks for learning about insurance, and we will see you next time.